Friends, if you are doing good in the stock market, earning from almost every transaction, then it's really awesome. But do you know we pay significant portion of our earning as a taxes, which ultimately lower down your post-tax return. Basically, this video is on a tax loss harvesting, an adaptable approach or a way to boost your post-tax return. It is an act of booking any unrealized losses to reduce the tax outgo on your realized gain before the end of financial year. Being a trader or investor, you can convert your unrealized losses into realized losses, and by adjusting these losses against a realized profit, a net tax liability can be reduced. To understand what is tax loss harvesting and its a mechanism, you need to understand the certain terminologies like realized loss, unrealized loss, realized profit. So realized loss is the loss which is incurred after selling a share, any share or a mutual fund unit. And subsequently, if a loss is certain on the sale of share or a mutual fund, but it has not been yet, is called an unrealized loss. Similarly, the realized profit is the profit on the sale of a share or a mutual fund. Let's understand this further by a hypothetical situation. Suppose you are having or you are holding 5 listed shares in your portfolio, and none of them is more than 12 months. That's all our short-term capital asset. And for each category of share, you have 1500 shares. You can clearly seeing it on the screen. 5 categories of shares, that is namely A, B, C, D, E. Their buying price, their selling price, or closing price on the specific date. A realized gain on shares you sold and unrealized loss on shares still lying with you is given in this table. Suppose out of these 5 categories of shares in your portfolio, you have already sold 3, namely A, B, C, and that too at profit. The 4th column shows a realized gain on these shares. That is a difference between the selling price and the buying price. Basically, it is nothing but simply saying it's a selling price. If the selling price is more than buying, it is a realized profit. And if the buying price is more than the selling price, then it's a realized loss. But unfortunately, we have sold our shares on profit. I hope you get the clear picture of this case to be discussed. Now let's understand first scenario, that is before we opt for a tax loss harvesting tool or adopting that. Means we are analyzing a situation if we do not know about the tax loss harvesting. So in that case, our total realized profit will be calculated as the individual share realized profit multiplying with a number of shares. So in the case of A, that is rupees 50 into 1500 shares. In the case of B, again 50 rupees into 1500 shares, and in the case of C, that is rupees 150 into 1500 shares. Or you can make sum of all these, or another way to calculate is we can take a total realized gain for one share multiplying the number of shares. So it comes 250 into 1500 shares. So altogether it comes 3,75,000. So this is our total income on which a capital gain tax liability is going to be arise. And looking to a period of holding, all are short term, as we have discussed earlier. As an investor, if you have any short term capital gain for the year, you will have to pay 15% of this as a tax. The tax liability is going to be calculated at the rate of 15% of the difference, which is going to be over the basic exemption limit which is available to the individual. So our realized profit is 3,75,000 and the basic exemption is 2,50,000. Our difference amount coming 1,25,000 rupees. So tax is going to be calculated at the rate of 15% on 1,25,000, which comes 18,750. And still share D and E are lying with us, and we have to pay tax of rupees 18,750. Let's understand the second scenario. That is, if we opt for tax loss harvesting tool. Usually, the investor tend to sell winning investments, each of us, while holding on to their losing investment. Psychologically, it is tough to sell loss-making stock, and typical reaction is to postpone the decision making. If you are someone who is still sitting on a realized profit, make sure to use any unrealized loss to reduce your tax outgo. Here, the opting for tax loss harvesting would be a lifesaver for you. So what to do? Just do one more thing in addition to above. Convert your unrealized losses into a realized loss. Suppose in above situation, we assume that we have sold 200 shares of D and 250 shares of E to realize a loss of 50 rupees on D and 150 rupees on E. Total comes to 200 and the numbers of shares are 1500. So we have a realized profit of 3,75,000, that is short-term capital gain, and a realized loss of 3 lakh, that is short-term capital loss. And this loss is going to be set off against this gain, 3,85,000. Since you have stock still in your portfolio, making a short-term capital loss, you can book this loss, set it off against the gain, and hence reduce your tax outgo. So our total income, that is going to be a difference amount of 385 and 3 lakh, that is going to be 85,000, which is below exemption limit of rupees 2,50,000. So our tax liability of 15% of 0 comes to 0. Hey, have you seen this? It's looking great. Earlier you are having 18,750 rupees as a tax liability, which is totally reduced to 0. That's why I told you it's a very effective tool to enhance your return. It has enhanced your post-tax return by 18,750. That is approx 2% increase in your return. Friends, you should remember always of using this tool after calculating the tax liability to decide whether to opt for the tax loss harvesting or not. If you have another thought that you have separated certain securities from your portfolio to take the advantage of this tax loss harvesting, which are currently showing losses but having a great potential in the near future, so don't worry. In order to make up for the stock that you have just sold to book the losses, you can either immediately buy a similar stock or wait till those stocks are delivered from your demat to buy them back again. So if you have sold D and E share to book a loss on Monday, you can either buy say F share immediately for the same value, or wait for Wednesday to buy back D and E share again. But by this you can continue to hold the same portfolio. But by doing this transaction, you would have saved rupees 18,250. Looking really good for investor perspective. After this, if you must have a question in your mind, what about traders? Can trader allowed to get benefit of loss harvesting? Don't worry, we will have understanding on that too. Friends, as a trader, any gain is a business gain and any loss is a business loss. So if you have not realized a business gain, that means whether it is a short term or a long term gain or from the F&O profit, you may have to pay up to 30% as a tax based on the slab you fall in it. This tax outgo can be reduced by realizing any business loss, which would mean you could sell any stock where you are making either a short-term or a long-term capital loss and use this to reduce your tax outgo. Once you have sold the stock, like explained above, you can either buy back a similar stock immediately or wait for the stock to be delivered from your demat and buy back the same stock again after 2 days. So in the same example we have taken earlier, say rupees 3,75,000 was a business gain instead of capital gain. Say you are in the 30% bracket. That would mean a tax outgo of rupees 1,12,500. By booking a loss of 3 lakh, your net tax outgo will be 30% of rupees 75,000, which is rupees 22,500. A saving of rupees 90,000 in tax liability. Remember, as a trader, you can set off any other business profit, that is any other income of excluding the salary income against this loss. Friends, if you classify yourself as a trader and you are having a salary income too, then remember, you cannot set off your non-speculative business loss against such salary income. Thus, if there are no other income except salary, the trader should not go for the tax loss harvesting, or you may declare yourself as an investor in that case. Friends, if you really like the content of this video, then don't stop your hands to press a like button, share it and subscribe button. Let's know in comment section your valuable feedbacks. You can ask your doubts too and provide suggestion for further improvements. हमें देखते रहिए और आगे बढ़ते रहिए। इसी उम्मीद के साथ see you soon with another knowledgeable video. Take care. धन्यवाद।